Hello everyone, good morning, good afternoon, good evening depending on what time you are watching this video. My name is John Bose, and these numbers you are looking at are for illustration purpose, information and educational purpose only. This is not investment advice. However, with this video I hope to show you that building wealth is a long-term game. It's a long-term game. So all those people that think that you want to do something quickly, get a shortcut to making wealth, it doesn't work that way. Building wealth is a long-term game. It takes discipline, commitment, and consistency. Now, there are many assumptions I made in this calculation. Assumption number one, I assume that this person is investing $8 every day. Now, if this person invests $8 every day, it means that in 30 days, they would have invested $8 times 30, which is $240. In 1 month, they would have invested $240. And in 12 months, 1 year, they would have invested $2,880 if they invest $8 every day. Now, work with me. This is how we arrive at the figure here, 2,880. Now, how did we arrive at the figure in B1? This figure is taken as another assumption that the investment vehicle, whether it is the stock market, cryptocurrency, but that the investment vehicle that this person chooses to use, real estate, stock market, whatever, is returning 15% per annum. The assumption here is that this person's capital will grow by 15% at the end of each year through the investment that he or she has made. And this person is investing $8 a day. Now, the question I am asking is that all these things being equal, the person is investing $8 a day, which means investing $2,880 every year, and is getting 15% every year. Assuming he does not touch his money, the returns are reinvested, the profits, everything is reinvested throughout that period of time. How long will it take him to make $1 million through the investment? Just to illustrate that building wealth is a long-term game. So we put the total amount invested in the first year, then we use a formula to add 15% to that amount to arrive at the amount of his investment and returns at the end of the first year. Now, using that figure, we include another $2,880, like you can see in the formula here at the bottom. We include another $2,880. That is the amount of investment of the next year, assuming he's investing $8 every day. And then we increase it by 15% to see what he will have at the second year. So you can see that in the first year, he started with $2,880 and closed with $3,312 because he has 15% on top of his investment. And the second year, because he invested another $2,880, including the $3,312 that he closed the previous year with, he now invested a total of $6,192, and plus his 15% ROI for the second year, he ended the year with $7,120.08. Now, it goes on like that. You see that every year he invests $2,880. Now, how long did it take him to make his first $20,000? It took him 5 years. He started to see $20,000 in year 5. How long did it take him to see $50,000? It took him 9 years. It took him 9 years before he saw his first $50,000 through investment. How long did it take him to see $100,000? It took him 13 years. He started to see his first $100,000 in year 13. How long did it take him to see, assuming every factor is the same, the factors being the amount he's investing and the ROI he's getting. Now, it took him 13 years to see $100,000. How long did it take him to see $200,000? It took 17 years to see $200,000. Okay, how long did it take him to see $500,000? It took him 23 years to see $500,000 in his portfolio. How long did it take him to see $1 million? He started seeing $1 million in his portfolio in the 28th year of his disciplined, consistent investment of $8 a day, with 15% ROI plus compound interest. It took him 28 years. But guess what? How long did it take him to see $2 million? It took him 33 years to see $2 million. Do you see that? The time it took to see the first $1 million and the time it will take from the first $1 million to the next $1 million is shorter. It took him 28 years to see the first $1 million. But from that 28th year, it took another less than 5 years to see the second $1 million. Are you following what I'm saying? The same thing, he's investing $8 a day, increased by $2,880 every single year. Assuming 15% increase in his investment, 15% return on investment. So, I'm getting somewhere. Now, he has seen $2 million in his portfolio. How long did it take him to see $3 million? From that 33 year that he saw his first $2 million, it took him another 3 years to see $3 million. In other words, another $1 million added to his portfolio in just 3 years. Now, from that point, how long did it take him to make $4 million? In year 38, he's already at $4,450,000 and $4,450,076 and 598 cents. Now, the next $1 million entered in year 39. And in year 41, another $1 million has entered. Now he's sitting at $6.7 million in his portfolio. The idea here is very simple. With just $8 a day, you can become, assuming all these factors are fixed variables, they are constant, you can become a millionaire by disciplined investment. Now, the time it takes you to become a millionaire by disciplined investment initially might be long, but the time it will take you from your first million to your next million will not be as long as the time it took you to make your first million. Follow what I'm saying. The logic is very simple. It takes money to make money. When you have capital, it's easy to make more money. So, wealth creation is a long-term game, which is why generational wealth must start from somebody, one disciplined risk taker, somebody who is willing to take the discipline and be consistent and committed to investing. If that one person was not your grandfather, chances are you do not yet have a portfolio of $1 million. But one person can start the journey, and maybe that person can be you. Maybe because of you, your generation can have a portfolio or at least a foundation to begin from. Maybe because of your own discipline, you can set the stage for those who will come before or come after you. Generational wealth is not built in 6 months. Somebody tells you, bring this amount, we will double it. And you bring all your family savings, and you don't do that. That's carelessness. People who are wealthy and build wealth, they know it took patience. Imagine that having built wealth for 40 years, one child is now born into this family. And this child was told, bring this amount, we will double it in 3 months. And he took the sweat of his family and went to go and blow it in one scheme. Imagine how painful, how betrayed the members of that family will feel. So don't be deceived that wealth can be built in a hurry. Wealth takes discipline. So my charge to you today is this. If the discipline did not start from your grandfather, if it did not start from your father, it can start from you, so that your children will not have to endure the things that you endured. In 30 years, you can build a portfolio of $1 million. It takes discipline. And if you have the mission to do such a thing, it therefore means that you must be looking at conscious investment you can make. Are you investing in stock exchange, the stock market? Are you buying shares in companies? Are you investing in cryptocurrency? What kind of assets are you acquiring? What is their historical returns on investment? Are you in it for the long term? Those questions will make you know what kind of assets to pick. For example, you cannot be doing meme coin. All those people that want to buy a coin and hope that it will pump so that they can sell it or dump it so that they can just get quick profit. You cannot be doing that when your aim is to build generational wealth. That cannot be your strategy. You want to gamble. You want to play Bet Naija or Naira Bet. That's your own strategy to build wealth. That cannot be your strategy if your aim is to build long-term sustainable wealth. Gambling cannot be your strategy. Now, if your strategy is to build a portfolio and your strategy is to discipline yourself not to go to that money, then you probably be thinking, I should be buying dividend shares, buying dividend companies that pay dividends, so that when I am building my portfolio, I will not be tempted to touch the money because I probably will be using the dividends to take care of my daily expenses and my daily needs and letting the capital to continue appreciating and compounding. Now, if that becomes your strategy and you're not thinking, which company should I buy? Which stocks should I put in my portfolio? That is where you'll now be thinking of analytical tools that you can use or services that can provide you signals that you can use to start picking those stocks and putting them in your portfolio. It is at that stage that you need something like what the SWC field is providing in the strategy that they put together called Road to 1 Million. So ladies and gentlemen, I hope that this will help you understand the need not just to build a portfolio, but to be disciplined and consistent in your investment journey. Now, please note, every single illustration here is for information and educational purpose. I'm showing you how wealth is built, assuming certain factors like the amount you are investing, the rate of the returns are constant, and just assuming certain factors. So it is very possible that it will not exactly play out in every situation. But this illustration at least can drive home the point that wealth is built through long-term strategic investing. God bless you.